Welcome back. This week is a big week for markets. In fact, it's huge. Let's take a look for the week ahead. And also I'm going to show you guys trades that I'm in, as well as that I'm looking for going into this week. So let's get started. All right, guys, so a quick look at this week's schedule. You can see we had a lot of PMI numbers, a lot of disappointing numbers across the board for the euro, for the pound, as well as some mixed sentiment for the US. But our main attention for this week as we go forward should probably be on some of the later data that we come out. Of course, if you're an Aussie pair trader, feel free to keep an eye on that CPI number. But the big one that I think everyone is going to be paying attention to is the FOMC event. This will cause some big volatility for markets as people see what the Fed decides to do with their next interest rate. Again, it is expected to tick up to 5.5. This is pretty much baked into the market, but the question will be with this press conference and statement, whether or not forward projections are for another rate hike or a pause. My personal opinion, I think we are likely to see a pause going forward. This is also what the market kind of considers, and that could cause some dollar weakness that we'll look out for in this week's price action. Next up, we also, of course, following that, we have the ECB's equivalent. We have the refinancing rate expected to go up by 25 basis points, and we have monetary policy as well. The statement coming out from probably Lagarde, I'm not actually sure, but I believe it is, of course, someone notable from the ECB during the press conference that we have about 30 minutes after the report. Also, we have Bank of Japan, which could move markets anywhere. Any volatility here, the policy rate is expected pretty much exclusively to just remain unchanged as it has been for a very long time. And then Friday, we have a big PCE number, which could be interesting as well. So big week ahead. And again, let's talk about markets going into this week. Indices still screaming higher, US 30 hitting fresh highs here as we speak. This is, of course, the 4-hour chart that we're pulling up here, and you can see just by using this regression trend line, it's a clear win for the bulls recently when it comes to the value Dow Jones Industrial Average. Not so clear though for the NASDAQ. The NASDAQ actually trading down recently, and I've made this clear on my live streams. I am looking for a deeper retracement. This is a daily chart view of the NASDAQ. I'm very bullish on this, but I think it's reasonable to expect some sort of a pullback within this upward trend. And my personal interest is if we do get a pullback to the zone here around the 15,250 level. This is a previous level of resistance that could turn into a nice level of support as we continue the overall upward trend. So I'm still bullish on indices and personally really interested in picking up the NASDAQ long. Now, I do want to back this up before I move on to other assets. Let's take a look at the COT data. It is Monday when we're recording this video, of course, and getting an idea as of what hedge funds and institutional money has been doing is very important information. So I've pulled up the smart money tracker on the EDGEFINDER, and we can see that gold is still king. So gold has a very heavy long percentage basis. We saw a big increase in the number of long contracts from the futures market last week, and we saw a big decrease in the number of shorts. Now, if you don't know, if I was fast on this, the basic idea is the COT reports track futures contracts traded by hedge funds, asset managers, and institutional traders, essentially. We get a look each week at what they have been up to. So a quick way of reading this is that this column shows the biggest long percentage. This column shows the biggest short position, smallest to biggest short position. So you can see if we scroll down, the yen, the South African rand, the Swiss franc, these are heavy shorts by institutional traders. While taking a look at the longs, we have gold, the euro, the Nikkei, silver, etc. So feel free to pause this video if you'd like to take a look at this table that you've got up on your screen. Or if you'd like to try out our software, there will be a link down below in the description where you can sign up for a trial or a tour. And we do also offer a free course to reading all of the data here and the strategies that traders are using to find better setups. So again, in terms of the indices, we're still 50-50 on the NASDAQ, but what is cautionary to me is that institutional money is still pretty short on the indices recently. And so this is gonna probably keep me out of the way of quickly buying up S&P pullbacks and Dow, but I am more intrigued taking a look at the NASDAQ. So let's keep going. In terms of retail sentiment, for those of you guys who are currency traders, on the major side, we have the Euro USD, which shows a very heavy short preference, same with dollar yen. And if we flip it to the long side, some of the extreme readings are dollar Swiss and Kiwi against the US dollar, as well as pound USD. Now, let's take a look back at the charts here about one chart that I'm actually interested in myself. This is gold, and I actually have a long position open right now, but it's not really working out too hot. price has gone against me. I picked up a long position in this area, this support zone, and I will probably stop out if we do continue lower. In fact, I need to add a stop loss to trade. Watch this. I'll be right back. Okay, and it's there. Sorry, I just had to update it. So I had a stop previously, but it got removed due to I didn't make it a good till canceled order. I just made it a day order. So I just had to re-add my stop loss. But my stop loss is in place. My idea with gold here is that we should hold this support zone. And if we don't, if we break this out, I'm going to be taken out for a small loss. And honestly, if it happens, it happens. It's a small loss in the account, currently floating down $234, but this is a current position for me. If, however, this price does actually hold, I think it's probably reasonable to see this zone shoot us back up to the previous highs and continue the overall upward trend that we've had recently on gold. So this is a trade I am in personally. I'm long, and we'll see if gold can play out nicely. Part of the reason I'm long is that it was actually generated by our watch list signals tab on the EDGEFINDER. So you can see strong buy rating here. COT shows institutional money is long, retail sentiment is about 50-50, so it's not giving us a signal there. Seasonal trends show the month of July is historically positive, trend to the upside recently. GDP growth, inflation and unemployment goes against us. Interest rates are flat for us. They've remained unchanged recently, so that doesn't give us a clear signal on that column. What the EDGEFINDER does, I know I'm rushing through this software, but I can't explain it in every single video. So if you watch my videos, then you probably are familiar. But if you're not, I'm going to link a playlist here in the top right hand. There's a card that you can go through if you'd like to learn more about this software in its entirety. But again, a simple explanation is a higher score is a more bullish reading, a lower score is a more bearish reading. It takes into account all of the metrics that you see across the screen. And as I mentioned, if you'd like to trial or check out the software for yourself, there will be a link down below in the description. So NASDAQ is also on my watch. This is a strong buy, and so is gold. These are two things that are very closely being watched by me and Frank, my trading colleague inside of our group. We're both looking to long these things if we can find setups. I'm already in a gold trade. I think Frank might have one as well. We'll see if that can play out this week. And if it doesn't, I'll stop out for a small loss and move on with my life. So we'll see if we can get a trade there. Let's keep going and see if what else. Another interesting topic here right now is the pound, right? The pound has been getting pounded recently, no pun intended. But again, it's been getting a little beat up, and you can see the daily chart here shows just how quickly this thing turned from very bullish to very bearish. Why did this happen? Well, CPI as well as PMI numbers that came out this morning both showed some slowdown in the economy, but also inflation cooling. Both of these things hurt the pound. And as we test this support zone, I personally am not putting a lot of emphasis on. A lot of traders would take this as a huge support zone and buy it purely off technicals. But again, these fundamental catalysts are going to probably keep me from being bullish. And again, this is why I think fundamentals can be very helpful. You can understand that we had really poor numbers on both categories that put pressure to the downside on the pound and actually could break us lower. So again, the EDGEFINDER is actually giving us a bearish reading on the pound USD right now, which I think is very interesting. So you have pound dollar weakness, a -3 score, and you'll notice a lot of this is coming from economic figures that have been printed. So we're getting bearish readings on the pound. And again, I don't necessarily think that this support zone should be overly bullish. However, one thing that's keeping me from being too bullish on the pound USD, too bearish, is that I'm also kind of bearish on the dollar. I think the dollar this week, especially with the Fed coming out with updated, projections, which I think likely inflation moving in the right direction, they're probably going to start to pause, their rate hiking cycle. That could give some weakness to the dollar, which could, of course, cause some upward move on the pound. So I am actually kind of semi-bullish, but also I'm mostly just neutral. I would say that the pound looks weak, but the dollar also looks weak. So perhaps trading the pound against something that looks more bullish could be more interesting. And again, here's the dollar index just to follow that up. The dollar is breaking out, so short term, it does look like some dollar bullishness could come into play. I made this point on my live stream here today, but if the dollar is able to break through this 38.2 and close on the daily chart, I think day traders may take it back up to this 61.8% retracement, which is the next level of major resistance that I see on this chart. So for the lower time frame traders, let's take a look at the hourly. This very well could be sort of a zone to zone play where you do have a pretty good move here potentially. If you get these sort of moves, you could, as a day trader, be trading this momentum, as long as I think you are aware that we do have major upper levels of resistance right around that 102 mark, a little bit higher on the dollar index. So we'll see how, of course, the Fed meeting on Wednesday comes into play. I'll have coverage for you guys on my channel going through all the way there. If you did make it this far in the video, do me a quick favor, today's keyword, if you would comment this, I'll try and heart your comment down below. If you made it this far, type the words Fed meeting. If you made it, this is your keyword here for today's video. I do this in a lot of my videos recently. It's kind of fun, so you don't have to do it. But if you want to comment Fed meeting, I'll try and heart your comment just to thank you for making it so far in my videos. Appreciate you guys. Remember, you can grab access to our software data for a trial or a tour, and also get our free course by messaging us down below or filling out the apply form that is in the description. Thank you guys. Have a great day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.